Save money with these landlord tax deductions. Hi, I'm Gabi Witas, your property manager here in Chicagoland. Landlord tax deductions are your secret weapon to keep more of your rental income and reduce your tax bill. From mortgage interest and repairs to insurance premiums and travel expenses, these deductions can significantly boost your savings. So let's get down to it. Here's how you can turn tax season from a headache into a win for your rental business. And here are the best landlord tax deduction. Number 1. Mortgage interest rate. Landlord tax deduction can help you save big, and mortgage interest is usually the biggest deduction on the table. If you've got a mortgage on your rental property, you can write off the interest portion of your payments, not the principal. So those earlier years of heavy interest payments are a tax savings goldmine. Plus, you could also deduct origination fees, points, and even interests on the loan used for property improvements. Number 2, property taxes. A great source of landlord tax deductions are property taxes. It's a nice way to soften those hefty biannual bills from the county. But property taxes aren't the same as income taxes, so don't mix them up. Beyond property taxes, you could also deduct rental license fees, occupancy taxes, and even personal property taxes on business items like appliances and furniture. Just keep in mind the IRS cap of $10,000 for combined state, local, and property taxes. Number 3, depreciation. Depreciation is a landlord tax deduction that lets you write off the cost of your rental property over 27.5 years, allowing you to claim wear and tear even if your property's value is climbing. That's like getting a tax break for something that doesn't actually cost you money up front. You can also depreciate improvements like new roof or appliances, but keep in mind land isn't eligible, and you may own depreciation capture taxes if you sell it for more than its depreciated value. Operating expenses. Landlord tax deductions can significantly boost your bottom line by allowing you to write off a variety of operating expenses, from advertising and maintenance to utilities and insurances. These costs are fully deductible in the year they're incurred. Startup expenses like accounting fees and office equipment may also qualify you for deductions up to $5,000. Don't forget, repairs, unlike capital improvements, are fully deductible when paid. So fixing that leaky faucet isn't just good for your property, but also for your tax bill. Keep meticulous records and consult a tax pro to ensure that you're maximizing these landlord tax deductions and keeping the IRS happy. Number 5, we have the insurance premiums. Landlord tax deductions turn your insurance premiums into a financial safety net that also shields you from a hefty tax bill. Whether it's homeowners, liability, flood, or landlord insurance, every dollar spent protecting your rental property is tax deductible. Number 6, professional services. Whether you're hiring a property manager, an electrician, a lawyer, or any other staff, keep those invoices organized. Even costs like employee wages, health insurance, and business-related entertainment are deductible. So your rental business expenses work harder for you at tax time. And travel expenses. Travel expenses are also tax deductible. So every trip you take to your rental property is a potential tax break. Whether you're driving to handle tenant issues, inspect, repairs, or collect rent, you can deduct mileage, gas, tolls, and even parking fees. For longer trips, you can also write off airfare, hotel stays, and meals related to your rental business. Use the actual expense method or the IRS standard mileage, whichever saves you more. Number 8, the home office. There's also the home office deduction, allowing you to write off all part of your home expenses like rent, utilities, and internet if you use a dedicated space for managing your rental. Keep receipts and be ready to prove the space is used solely for rental activities, since the IRS scrutinizes this deduction closely. Calculate your deductions based on the square footage used for business, or use the simplified IRS rate of $5 per square foot up to 300 square feet. Number 9, legal fees. Legal fees related to your rental activities like drafting leases, handling evictions, or defending lawsuits are deductible. Just make sure to separate personal legal legal fees from rental-related ones, as only the latter qualify. Eviction proceedings, often a landlord's worst nightmare, can be financially draining, averaging about $3,500, but knowing these expenses are deductible can help soften the blow on your bottom line. And finally, my favorite one, which is the education. Education costs that improve your landlord skills like courses, workshops, or books are deductible, letting you learn and save simultaneously. Knowledge is power, and with Uncle Sam helping foot the bill, you can boost your expertise while reducing your taxes. Just remember to keep all courses, material, and receipts, as the IRS loves thorough documentation. Maximizing landlord tax deductions can turn tax season from a headache into a victory lap. Keep your wits about you by saving every receipt and maintaining detailed records. Good records not only help you prepare accurate tax returns, but also protect you if the IRS comes back knocking. As always, you can find a link below to schedule a free consultation with me. So, what's your experience with tax deductions? Share your thoughts with us in the comments below. Thanks for watching, and as always, where's your future?